How's it going, everyone? So for those of you who are wondering about this hovering light bulb in the background, don't worry about it. It's just magic. It's just magic. That's the only way I can explain it. But I'm just about to interview John Feneck, who is the founder of Fenecks Consulting. And why am I interviewing John Feneck? Well, if you look back through 2022, he made 3 accurate predictions. I've actually interviewed him before, but before I'd interviewed him, he correctly predicted the 2022 market correction. 2022, the market went down by 20%, and he predicted this. One of the reasons why was because of the Fed's hawkishness, and also because he saw performance managers stretching for bonuses. Those were two of the reasons why he predicted it. Then his second accurate prediction was when I interviewed him. He said that he didn't predict a bounce up again in the market. And since that interview, which was 4 months ago, the market is basically at the same level that it was since then. So that's 2 accurate predictions. His third accurate prediction was related to the Federal Reserve. He predicted, unlike most who thought the Federal Reserve would flip-flop and change their strategy, he said no. He said that the Federal Reserve will most likely continue with their hawkish policies. So those are 3 accurate predictions. Now I get to interview him, and let's see what he's predicting next. I have no idea what he's going to say.
So yeah, let's first of all, thank you for having me back on a second time, Tristan. I
Yeah.
appreciate it, and I hope to get to know some of your listeners better over the next coming months. I think that just starting with the Fed, because that's really all important. November 4th was, or November 2nd was the most hawkish I've heard Powell speak since he's been in office. So when people are saying, "Oh, this is getting better," they obviously didn't listen to the press conference because he was saying over and over again, we're going to be resilient. We're going to get to our mandate. It's like those are the kind of things you don't really want to hear if you're long equities or a long gold and silver. It really doesn't matter. And as you saw November 2nd in the last 2 hours of trading, the market really sold off. You had follow through selling on November 3rd. But what happened November 4th was 2 things. First of all, you had non farm payrolls come in slightly above the estimate. But what was more important with that report was that the unemployment rate in the U.S. ticked up 0.2%. So the market seemed to love this because it was indicating to them that the Fed would have to slow because unemployment's running out of control, which you and I both know is not true. It's only 0.2%, people. It's like, who cares to
Yeah.
me? But the market cares. So you have to respect the tape, as we say. And from November 4th up until literally today, the 28th, you've had a really nice run in the stock market. So, we look at opportunities like that to say, is this the beginning of a new trend? Meaning the bull market will continue as it has for 12 and a half years? Or is this just another head fake? And you've had a series of head fakes this year since January 5. I told you a pre-show and on your last show, I got really short, starting January 5 and into February, March of this year. So I don't just tell people what to do. I'm actually doing it with my own money, right? Like if I think real estate's inflated, which I think it is, I'm selling my houses. It's like I'm not sitting there and holding them and crossing my fingers and hoping the Fed, has my back, because it doesn't have our back right now. So, just talking about the near term trends, I think what this is a head fake. I think November 4th to 28th is a head fake. December 14th, the Fed's going to probably go another 50 basis points, in my opinion. That's not good. I don't see, we'll celebrate that it's not 75 as it has been 4 times in a row, but, the trend is still going up, right? So, like, I think people need to understand that December 14th will be a hike. February 1st is scheduled to be a hike right now of a quarter or 50 basis points. Yes, less, but still a hike. So somewhere between February and May has been my prediction, like all year, that we're going to get some type of relief from the Fed in terms of the backing off of the hawkish verbiage. We're just not there yet.
So what is this going to do to the stock market then? The fact that the Fed is more hawkish. So you believe it's a head fake, aka it's just a little up in the market, but the overall trend is kind of down.
Right. We're still in a bear framework, I think, from January 5th to today, right? So like you get these series of head fakes, meaning rises in the market. Another great one to look at would be like late June until about August 19th, right? Um, it was a huge run for a number of weeks. what happened on August 19th, that Friday, we had triple witching and the stocks just sold off huge, right? And then the following Friday, the 26th, you had the Fed at Jackson Hole, Wyoming. And if you remember, Powell had like a 7 or 8 minute speech that was super hawkish, and the market tanked again. So that rally failed, correct? So that head fake was confirmed failed. Then we had some selling pressure into September, October, and then November 4th, we turned the corner. But the question is this a permanent turn? Is this going to be getting us back to new highs in the markets? Absolutely not.
So do you think it's kind of just going to be dribbling on for the next sort of maybe 5 months or whatever? Or do you think it's going to actually go quite a bit lower?
I do think it's going to go quite a bit lower, and I don't know when that's going to happen. Like I said, I think December 14th will be very important to watch Powell's positioning on that day. And then you've got a nice chasm there between December 14 and February 1, along with, beginning of the year and people back at their desks. And it's going to be a lot more volatility potentially and a lot more trading volume starting in January. So that's when, you want to watch for things deteriorating possibly in Q1. And by deteriorating, I mean, look at September 30th close on something like the S&P 500. You closed at 3586. You're, I think, around 4,000 right now. Let's just say a big round number, right? I mean, if it gets back below 3,600 on a close, whether that's a monthly close, quarterly close, you're bringing in 33 to 3,400. And so that's when people will start to wake up and be like, oh, I didn't sign up for this. Like this is going to be worse than I expected. We may be entering a recession. If you look at Europe right now, there was an article from a large newspaper, I think the Financial Times last week, saying, 72% chance of a recession in Europe next year. So, these things are, going the wrong way, if you're a long investor. And so if you're long stocks, you need to be thinking differently about your positioning than you did the last 12 and a half years.
Oh, there's no doubt about that. We've just experienced the last 12 and a half years. We've had a massive, massive bull run, but it does seem that, times are changing. So we might want to alter the strategy slightly with different market conditions. So you said January 5th, you shorted some stocks. Now, are
Mhm.
you currently short stocks right now or short
Yes.
other what
Yes. So
stocks?
we're about 10% cash, about 14% short, and the rest long, but only in mining and energy. So I run two portfolios in mining and energy. Mining's been around for almost 7 years now, January 1st, and energy will have, I think, about three and a half year track record coming up here. So yeah, I think commodities are going to be a really good place to be over the next 1 to 3 years, maybe 1 to 2 years being conservative. And so I'm positioning for that.
Okay. So have you studied what commodities tend to do when times are tough and there's recessions? I kind of remember doing a bit of analysis on what happened to gold in the 2008 recession. And from what I saw, I think it went down slightly and then it kind of held its own in the recession. But then the years following the recession, it just shot
Mhm.
up like nothing else. That was with gold.
Right.
What do you see with commodities in tough economic times, especially gold?
Yeah, good point. And all commodities are not created equal. Let's start with that, right? You've got precious metals, which are gold and silver only. Sometimes platinum or palladium will start trading like, precious metals on certain days. But really, that's your precious metals complex. The industrial metals complex, that's copper, zinc, lead, base metals. That's a totally different trade and a totally different trading pattern. And then you've got energy like clean energy, oil, gas, all of that is a different trading pattern, right? So we write a commodities newsletter covering all of this stuff for clients, so I'll highlight a different commodity every issue, and I'll write a paragraph about that commodity and then give 3 to 5, equity ideas within that. But that, when I say the commodities complex is going to do well in the next couple of years, I'm mostly like a gold and silver guy by trade, like most mining people, right? So like I look at that first, and then I look at other opportunities within the complex, like copper or palladium or wherever, where I see value. So I do think that gold has done a decent job here of holding that 1615 kind of level couple of times, which is bullish. And you saw that consolidation in August that we saw, and then it took off right into the 1750 plus range, which is very bullish. Silver did even better. Silver has started to narrow the gap between silver and gold. It's been pretty large going back a number of months now. Silver could be leading the way here. It's a little too early to tell, but if it is leading the way, that's what you want to see in prior rallies. You had pointed out in 2008, right? So if you look at December of 2008, the most popular, mining ETFs out there are GDX for the larger names and GDXJ for the smaller names. And so if you look at GDXJ, December of 2008 to June of 2009, that was up about 180%, I believe. So, gold was up substantially, as you pointed out, but the miners have leverage to the price of gold or silver. So that's why I think at this juncture, I'm more interested in the mining stocks than I'm interested in the metals.
Really, I was actually going to ask you that question, the mining stocks than the actual metals themselves. Okay.
Mm-hmm.
And would you be more leaning towards silver mining or gold?
It's really, as I say, a rifle approach. I'm not leaning one way or the other at this point towards a particular commodity. It's like I'll just find value everywhere. There's so much value right now in gold, in silver, in copper, in palladium. You just have to be able to align yourself with someone like me that's sitting at a computer 12 to 14 hours a day, that's
Mm,
actually doing the research on a holiday weekend like I just did, that's putting in the time to give his clients and followers an edge, right? And it's all via public information. Let's just state that. I
mm,
mean, I do bang the phones pretty hard, and I call CEOs every single day.
mm,
So when I want more clarity on a particular news item, when I want more clarity on, I'm calling these people, Tristan, more for like what bad news is coming. Tell me something bad. I want to
mm.
know all the bad. The
Yeah.
good's all over the website, right? Like,
Oh,
so I
yeah,
want
yeah.
to know.
Yeah, you'll
Yeah, so I
find the
want to
good
know.
all over the
Yeah,
internet.
tell me what's happening next. How much cash do
Mm,
you have? How long is that lasting? What's your burn rate? What
mm,
are upcoming events you've got going on that may be catalysts in the next 1 to 6 months? So it's like things like that are simple phone calls. Everyone that's listening to this can do it. It's free. If you have a hard time getting a hold of these people, sometimes they're traveling, busy. I mean, that's why you hire someone like me to get that information for you, right? So
mm.
like it's we continually put out information via emails to clients about, hey, I just sat down for dinner with this guy, and maybe it's two sentences. It's just my take on the meal and how things are going over the next couple of months for the company.
Mm. I don't think people quite realize how much of an advantage you actually have if you're just at the computer all the time, just constantly looking for, okay, where's the opportunity? Where's the risk? If you're constantly doing this, another advantage is, especially if you're got an independent environment, I believe that really helps. Just like Warren Buffett, he's always just alone in his office, just studying different bits of information. Whereas if you're surrounded by people, sometimes that can confuse the mind a bit. So yeah, I believe you probably do have a strong advantage, just the fact that you're constantly at it and constantly analyzing, the different bits of information. So I guess, what are you seeing right now? Do you see a particular opportunity in a particular area? Do you see a particular risk? Like what trends are you kind of seeing?
Yeah. So I see a lot of opportunity in mining stocks, as we said, because they're so bombed out. This sector peaked August of 2020. So that's 27 months ago. Okay. When you look back at previous corrections, and I'll give you your listeners a couple. So December of '08, we mentioned, was a bottom, right? That was a bottom in mining stocks that led to a huge gain going forward into 2009. December of 15 or Jan of 16, depending on who you talk to, was the second bottom in the last number of years. And that led to a huge gain through August of 2016. Huge. We were up 149% that year. We were live with our portfolio then. This time around, it's not going to be maybe a 180 or a 149, but it's going to be good, and you have to think to yourself, do I have to get the absolute best entry point on this? These things are so
Yeah.
beaten up, you don't really need it, right? So what I
Us.
recommend to people is, yeah, putting out two orders, right? Put out a small orders, right? Like put out an order close to the action, meaning the bid and the ask, see if you get filled. if you don't, have what we call a stink bid about 5 to 10% away from the action. So if you get a big seller here at year end for tax loss purposes, you can get both of those orders filled, right? And so you lower your cost by not putting all of your eggs in one basket, buying a stock 1 day or 2 days, right? We buy 6 to 12 times on the way up, right? We're constantly buying in small increments. And then when we have our position built, we just sit back, right? But most of
Mm,
our competitors are buying once, maybe twice, newsletter writers included, and that's it. And that to me
mm,
is flawed because of the volatility we've seen this year, right? If you make a series of bad decisions on entry points, you're down 20 to 50% easily in mining this year.
So is that kind of like in a way, a dollar cost average kind of method towards the
Mhm.
bottom in a sense?
Yeah, we use dollar cost averaging, meaning to just spell it out for someone. Let's say you bought a stock for $1, okay, dollar a share, and now it's trading at 70 cents. Well, it's 30% off, right? So like we buy a little bit more at 70, but we don't buy a full position because it might go to 60, and then we'll buy some more at 60, right? And so
Mm,
we're lowering our cost. Our original cost at $1 is now maybe 75 cents, right? And so if the stock goes to 90, you would have lost 10% by just holding, that dollar trade. But now because you bought twice more from
mm,
75 to 90, you're making, whatever that is, right? So you're
mm.
making a decent return. And that is going to save people because there's so many people who have been paralyzed, I think, by the price action since August of 2020. They haven't taken the time to dollar cost average down and lower their cost basis.
Mm. So mining stocks is an area that you see opportunity in. Is there any other areas, or is that your main one right now?
I mean, on the long side, I'm tracking energy very closely, but we're still not like 100% ready to go there because energy typically is a bullish commodity. And I want to see which way the market breaks here, because energy
Okay.
could be a little vulnerable. Obviously, if Russia backs out, you've heard rumors in the last 24 hours about them backing out of certain areas, like the power plant in Ukraine. I don't think that's true. But again, like it's something you have to watch, right? Because
Yeah.
energy is going to be affected by what happens in Russia, Ukraine. So yeah, we also like shorting. We use a lot of ETFs to short. So we short themes, right? We short emerging markets, we short international, we shorted China. We covered 90% of our China, recently, but we made a ton of money on shorting China this year
I'm sure
because
you
we
have.
just thought, yeah, we just thought that you've got a regime. You had the vote with Xi just a number of weeks ago. You had the COVID lockdown has been a persistent theme all year. Been a series of head fakes there where, oh, we're reopening, no, we're not. And you see these aerial views of parts of China that are supposed to be heavily populated, and there's just no one on the road. It's like, I mean, to me, it was an easy short because you're like, how is this going to work if you're a hotelier in China or you're a restaurant chain in China? No one's showing up. Like,
Of course.
so these stocks are just drifting downward.
Mm.
But yeah, we 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 tend to short themes as opposed to individual companies. However, right
Okay.
now there's some great individual companies to go after as well because some of them have really run up here. If you look at the disparity between, I just looked at Walmart today, WMT. I mean, look at that versus your favorite retailer. The chart looks beautiful. Why does it look that much more beautiful than everything else, right? So maybe short that a little bit. I'm not saying we are short Walmart, but I mean, short that and then go long something else. That's called a long short strategy. So that's something I've been doing, for 22 years and just started to get more active with it January 5th of this year.
Mm. So we'll stick to China. What are you seeing in the future with China? Are you kind of seeing the same thing continue to happen? I mean, from what I see, just looking at Twitter and stuff, I've seen there's protests going on. A few Chinese people are actually for once kind of protesting. It's very interesting to see because it's very rare to see protests in China. I've seen a lot
Yep.
of kind of what would the word be? Sort of dictatorial behavior from China, where they just you have to be locked down, and then they have the drones that are filming everything. There's a lot of weird
Mm-hmm.
stuff going on in China, but what do you see kind of over the next couple of months with China?
Yeah, I did see that news today about the protests, and that's definitely new behavior. And we'll see how that plays out. Hopefully, it doesn't lead to violence. But I think that my biggest thing with China is a possible invasion of Taiwan. So
Mm.
if that happens, Chinese stocks are going down much more from here. In fact, the entire international complex is going down. European stocks, emerging market stocks, right? Like all of that stuff is going to get affected
Yeah.
because markets are not factoring that in right now. So, I hope that doesn't happen either. I'm just saying we live in a very difficult time right now. There's a lot going on. And I think most investors are still pretty turned off to like what's really happening. I lost four friends of mine in 9/11. So I made a commitment to myself 21 years ago that I wouldn't, be as unprepared, I guess is a good word, for something like that. I didn't really know what was happening with bin Laden in 93 because I was young, I had other things going on and I get it, but when you have something like that happen to you, like really close to you, you wake up, right? And you say,
Mm.
okay, I need to start following international events. And if you actually read this stuff, it's pretty crazy right now. When you look at the world in mining, for example, there's been a regime change in Peru. There's been a regime change in Chile. There's been, you know, Biden just went after two huge execs over in Nicaragua. Really quietly. I don't know if you saw that story, but like there's a lot going on internationally, and it's not good. These are not good headlines. So we will cherry pick companies that are doing operations in say a Chile or Peru because we know the CEO, we know what the risks are, and we're accepting that political risk, right, by buying that stock. A couple that come to mind are
Yes.
in the silver space, right? So, like, you've got Aftermath Silver, which is an operator in Chile and Peru. They're an explorer, but they're also in the development stage, right? So, they're coming out with some news probably in Q1 on Berenguia, which is one of their largest projects. Since I was on your show, they sold their third largest project for cash consideration. So, they've got a lot of silver in the ground. Yes, the jurisdictions are a little bit challenging. However, when you look at what the news flow has been in something like Peru, right, you have to ask yourself as an investor, is it going to get worse from here or going to get better? That's all I care about, right? It's not what happened. Yes, some of that's relevant, but like, do you think that Castillo is going to be there for 5 more years? Heck no. Like Peru has a leadership change almost every year. So if he is going to get ousted or leave next year, why not buy a Peruvian miner now because you can buy it cheap now, right? Like when the news comes that he's gone, Peru's going to get a bump because Peru is a huge player for like things like silver and copper. Um, Another name in that area in Peru is Silver X, which is AGXPF. That chart looks absolutely beautiful for a silver company. They just came out with news today that their revenues increased, considerably. They're all in sustaining cost. AISC is reasonable. It's under $16 an ounce silver. So that's a company I've started to really get involved with since September. The chart's really gone up nicely, and they just completed a financing, as did Aftermath. So I'm willing to take risks, Tristan, in parts of the world like that where I have gotten to know those companies pretty well and done a lot of research.
Mm.
But looking at something else like gold, there's opportunities in the U.S. that I think look great as well, right? So I'm not always trying to put money into jurisdictions that some may find a little bit more challenging. Idaho to me is a great state in the U.S. for mining. It's very open minded to mining, where some states are closed minded, of course. Idaho Champion is my biggest position in the U.S. Alongside of U.S. Gold. The tickers are GLDRF on Idaho Champ, and U.S. Gold is USAU. They're both in the western part of the U.S. Another one that I've developed a position in this year is Thunder Mountain Gold, which is THMG. They've been around since 1935. They've got a really interesting arrangement in Idaho with a company called B Metals. Just for the sake of time, it's a little bit difficult to get into the entire process and what's happening right now, but all three of those companies have significant news coming within 12 months. Many of, I would say that's very conservative, probably way sooner than that, right? So, like, when you look at, following a stock for a couple of years, owning it for a couple of years, and you've got a payday potentially coming, it's getting more exciting, right? Because you're getting closer to that the point why you bought the stock. And I think that's true of Thunder Mountain. Idaho Champ is sort of like a story that's kind of revising itself, right? It was a pure gold play to start the year, but then it started to focus on its cobalt claims in Idaho because there's a company called Jerbois, which is really close by, that's doing extremely well. And they have done a fantastic job, I think, of focusing on their cobalt claims, expanding their shareholder base, and then also getting into lithium here in September. So they've not done that purchase of the lithium property in the US. They actually did it in Quebec. So now you've got a company that's doing not only gold in the US, but now cobalt in the US and lithium in Canada, really transforming itself. And then lastly, I just mentioned US gold, and it's my largest gold position. It's been a difficult holding, I think, in the last couple of months, in that it's only got 8.3 million shares out. So when you have a low share count, it can work for you and against you. And right now, it's been sort of in this 350 to 450 kind of range. It's trading around 375 right now. But I think it's going to break out next year because they're going to get their permits in Wyoming. I actually got on a plane to Wyoming last year to check out the project. This is called the Copper King Project, and I met some of the politicians in Wyoming, met some of the people that work at the state park nearby. Like, they are all for this, right? So when you are in mining, the risk is that you have people strike, you have people, not give you your permit, right? Like, there's a lot of things that can go wrong. I don't see that at all with U.S. gold, which is why I have a comfort level with the company and why it's our largest holding in gold.
Wow. Okay, we covered quite a lot there. I want to switch gears slightly because you follow a little bit of crypto, right? You said before we started the interview, you follow a little bit, right? I'm not sure how much, but I want to kind of get your overall, thoughts on crypto. I mean, just from what I see, there seems to be a lot of kind of unethical behavior, a lot of risk in the space. I believe if you get into it, you really need to understand the risks very well. And obviously, there's some coins and exchanges that are more riskier than others. What are you
Right.
seeing? What do you think about SBF and just the crypto topic as a whole?
Yeah, I mean, it's obviously a developing story on SBF, and I don't want to disparage him or anyone else, but I can say that what's different about this versus Bernie Madoff is that
Yeah.
Madoff had a select number of clients, right? And when that Ponzi scheme went south, it affected those clients. This is way bigger because it's the little guy who's like using crypto as gambling. We all know that people do that, right? So it's like now you've gotten a taste of the other side, right? Like, oh, you can lose all this money, right?
Yep.
And expect that was possible. That is the beginning of potential bankruptcies. I mean, we saw another bankruptcy today. So when you get a number of companies failing or going bankrupt in the same sector, it's going to feed on itself. This is not a big sector, right? I still think, and this is just my opinion, but I still think there's a lot of whales out there that control a lot of big positions, right? You don't see that in gold. Like, you can't have a billionaire, completely just blow out a position and see gold down 20%. You're never going to see that. There's just too many owners of gold, right? So that's why I like regulation. And I know that that is something that I get, trolled for, but look at what happened, right? Without regulation, this happened, right? So you need to get to a better place. Uh, to me, that's through regulation next year, the year after, whenever that happens. And as I've said since inception in 2016, I would be very interested in looking at crypto at that point. But right now, it's still a casino. It's too unregulated for me. So we have zero position there. We've never had a position in anything. And as I told you off camera, a couple of clients that were really good clients came to me about Coinbase and some of the other stocks, and I was always telling them, "Hey, look, you have to get out of this. This is not something that looks good to me. The charts all look reasonably bad, and things have started to feed on themselves now. So I just would tell people, if you're in it, proceed with caution. Look at support lines. Major support on Bitcoin. Of course, you're many more intelligent people in crypto than me are talking 10,000 or 12,000 as kind of major support levels.
Interesting. Yeah, that can be a very sort of uh not an exact science, we could say, of trying to predict the actual, sort of bottom and the support levels. But yeah, obviously different people who study it in depth will know a lot more on that. So you, at the moment with crypto, you're not seeing any opportunity, because some people would argue the best time to buy is when everyone else is panicking and things are down by a lot. On the other hand, you kind of need to see a little bit of a light at the end of the tunnel, which I'm not quite seeing when it comes to crypto.
Yeah, it's still too early, in my opinion, to bottom fish because look at what happened today. You had another player go bankrupt. I mean, things are developing, so you need to understand how these things are connected, and I don't understand how they're connected, so I'm
Yeah.
staying out until I understand that, or there is regulation. But I think that to your point, where I would be bottom fishing is something like mining stocks, right? Their high was August
Yep.
of 2020. It's 27 months of pain. To give your listeners some perspective, in the previous corrections we talked about, like the '08 period in 2016, going back to 2008, you've had corrections that lasted maximum around 8 months. So this one's 27 months. It's more than a triple, right? So like I'm not saying you're gonna get triple the upside, but I'm saying that you're kind of taking a rubber band and stretching it as far as you can. And at some point that's gonna snap and you want to be positioned when big money starts to look at our sector again, right? And what could bring that on, Tristan? Well, a couple things. An S&P break, like we talked about, where a major indice where people have their eyes on. China going into Taiwan, that is not factored into prices. But really, Bitcoin is throwing mining, believe it or not, and commodities in general, a lot of new buyers because they're fed up.
I'm not surprised by that. Yeah, if their crypto positions are collapsing, they're going to look for something that's a whole lot considered a whole lot safer and just got that historical value of being safer. So that doesn't surprise me at all. But I want to thank you very much for coming on the show.
Sure.
So just with regards to where viewers, if they want to learn more from you, where can they find you, and what would be the main reason that they would go to you? Would that be mainly for looking at gold and silver type stocks, or just for spotting trends in general?
Sure, that's a good question. So, like I said, we have two portfolios. One is in mining, one is in energy. So that's where I have my expertise on the portfolio management side. I was an analyst for years prior to that. I've worked closely with portfolio managers, so I understand how big money thinks. So that could be of value. The newsletter covers all commodities, and it's very inexpensive. So sometimes I just tell someone who's got a little amount of capital that might be the best place to start. But to your point earlier, you can't buy 8 newsletters. Like that's not going to do you any good because you're going to be totally confused. You need to align yourself with a couple of people and follow them, and if it's me for commodities, someone else for tech, someone else for Bitcoin, right? Like that's cool. I mean, you got to do it that way as opposed to be like, oh, I'm going to buy all these newsletters and be smart now. You're not going to make enough money doing that because you're going to be confused and you're going to be paralyzed by the confusion. You're not going to be able to act. So it's important in what I do to have a clear mind every single day to be like, okay, this is what I want to accomplish today. I'm not perfect, but 90% of the time I come into every day with a game plan and I'm going to execute that game plan. And when I see things changing, what I do, Tristan, is I email my clients, right? So like when I saw the market start to turn over today, I got that email out within an hour of the market being open, maybe an hour and a half, and the market closed down significantly. So, if people wanted to short, they could have shorted all day, right? I mean, almost. So it's like giving them a little bit of a real time, help that I think makes us different through generic kind of updates and emails that are like macro related.
So they would go to what is it, Fenneck Consulting? You got a website?
Yep, fenneckconsulting.com.
Yeah.
And then you can email me. I'm very accessible, john.fenneck@yahoo.com,
Mm.
or email me through the website. But I'm happy to work with anyone, on their personal situation.
Do you have a YouTube channel?
I guess I do, but I don't really focus too much on it.
You mainly do interview. You're quite busy on the old interviews, eh?
Yes.
So if they want to follow you as well, they can always keep track of
Yeah,
all
I'm
your
on Twitter.
interviews.
I mean, a lot of people follow me there and I try to post, but I'm really, you know, I really focus on my clients because that's
Yeah.
who is relying on me. And
Yeah.
so I feel like I feel like I get a lot of this where people say, "Hey, I followed you for 6 to 9 months," and I would wish those people would just contact me now because we're getting really close to a bottom in the sector that I have expertise in, right? And so no one rings a bell for you and says this is your entry point. Like you have to just take some risk at some point. But now that we've had a 27-month sell off in mining, it's a really good time to start looking at things.
Well, I'm very interested to see honestly, to be honest with you, I don't follow mining that much, but and I don't actually know that much. I'm just trying to learn more. So yeah, I'm going to be very interested to see how mining does and what goes on in that sector. But to be fair, you have been with the three predictions that I saw, you've been pretty accurate on so that's pretty good
Thank
in
you.
terms of track record. So thank you
Thank
very
you. I
much
appreciate it.
for coming on, John.
My pleasure.
Okay, have a good rest of the day.
You too.
Goodbye.